10 essential, no matter what, tips for any entrepreneur. Hi there, Kenner French with Vast Voice, the media arm for Vast Solutions Group. We just launched, and man, we're getting some listens, we're getting some views, we're getting some readers. Vast Solutions Group's been around 50 years, but now we're really hitting it. 10 essential tips for any entrepreneur. Here we go. Small business owners, really, if you think about it, they should conduct an annual assessment for their personal finances. How many do? How many people as an entrepreneur are too busy with paying attention to what's going on outside of their business, of their law practice, of their restaurant, of their tax consultancy, whatever the case is? Well, they got to settle down once a year at a minimum. Pay attention to their personal finances. Owners of small businesses have so many concerns. Actually, frankly, sometimes they have too many concerns, but then again, at the same time, they have to think about their personal finances and taxes. In a sense, small businesses, it's kind of like a family. There are important families in American economic life. After all, small business, it's vital to the U.S. economy, employing half of the private sector workers, if you think about it, and creating 2/3 of net new jobs, according to the federal government. I remember hearing a while back. Now, let's go over the 10 top tips to follow in weighing in as a small business owner, specifically to their financial and personal well-being. Budget and saving. The general financial planning rule is that you should at least save 10% of your income on an annual basis. You should also review short-term and long-term goals to ensure you're saving enough to meet objectives. Too many people just let that pass by as entrepreneurs, again, because they're working on their whatever the case is, dental practice or what have you. It's one thing to think about. 10% of your income on an annual basis you should be socking away. Maximize contributions to retirement plans. Now, remember, every dollar that goes in, you get a tax deduction typically, unless you're talking about a Roth 401k or Roth IRA. So instead of giving money to Uncle Sam, you put it in your pocket, specifically, your pocket that grows, hopefully, tax deferred if you're doing everything correctly. When you pull the money out, that's when you get taxed. Now, depending on the size of the company and the number of employees, there are many different methods to retirement. On a let's say an annual basis, business owners, you really should work with their accountants, advisors, to determine the most appropriate savings vehicle, because each one really has its own merits depending on the circumstances. Some of the retirement plans you got to think about are 401ks, individual Ks, unit Ks, sometimes they're called, solo Ks, individual retirement arrangements, SEPs or simples, Roth IRAs, defined benefit plan, contribution plan, the whole list. This is not only will help achieve the goal of saving, let's say, 10% of your income, but it also, as I mentioned, helps to lower taxes. And, that's the business owners, the entrepreneur's biggest expense. Some people say it's the employees. Well, no, it's not even close to being the biggest expense. You know why? Because employees, if they're hired, it's an investment. If you're going to pay $1 for an employee, you're assuming you're going to get back over that dollar, if not really, hopefully doubling that dollar that you've put into that employee that you're going to get as a rate of return. You're looking for a cash on cash of maybe double when you're talking about employees, hopefully at a minimum. Now, think about creating and reviewing estate planning documents. It's important to create a will. It's important to create a living will, a medical, and a financial power of attorney. And without those, leaving your heirs in a pinch, you might actually be doing. These documents need to be reviewed annually, as would be the case for your personal goals and your estate planning laws, changes in your situation that would change. Now, kind of in line with that, life insurance. Various types of life insurance are available, including whole life, variable life, universal life, term policies, universal, variable life, kind of the whole gamut. But they provide a death benefit when the owner of the policy passes away. It could be your business being the beneficiary or family member, depending on the circumstance. It's important to review the policies annually to ensure the coverage is adequate to protect your loved ones. Because I know me personally, I've been married for over 25 years. I don't want to leave my family in the lurch if something should happen to me. So hence the reason I have enough life insurance just in case. Also financial situations change, and you may no longer need the full amount. So who knows? Maybe you can drop your life insurance depending on the circumstance. Now, Talk about insurance, disability insurance. Statistically, you have a greater chance of premature disability than you do of premature death. It's important to own, adequate insurance just in case something happens and you're not able to work in the future. Annually, you should review your policy for the type and the amount of coverage. So that's where a disability insurance practitioner or a financial professional can help you. Business insurance, we're talking about disability insurance. Let's talk about business insurance. As a business owner, it's important to own insurance that will allow your company to run if you're unable to actively participate in its business operations or daily operations. This insurance may be used to hire a person to substitute for you or to replace income if the business or company no longer exists going forward. Long-term care, I know sometimes it's not fun to talk about that, but due to the increasing costs of healthcare, we all know it's probably not going to go down. Long-term care insurance policies are evolving, becoming, something more and more interesting to some people, even though it's a difficult topic. Many older policies have become more expensive to maintain or no longer provide enough coverage depending on the circumstances. Each year, again, review the costs and the necessity, of the policies. Several college savings vehicles are available to provide tax advantages and an array of investment options for college saving. These savings plans require, again, annual performance and expense reviews. Tax planning. Now, I say annually, but really it should be more often. But annually, you should meet with your CPA, your accountant, your enrolled agent to discuss tax planning strategies, because you don't want it. You don't want to sit there April 14th, April 15th comes, oh my gosh, this is my tax liability. No, you want to figure out January 1st what your tax liability is going to be. You want to figure it out going on a go-forward basis. You want to prognosticate. Well, that's the reason we at vastsolutionsgroup.com have adopted AI, or artificial intelligence, so we can predict. We, meaning the model, our black box that we call Einstein, can help us to predict what the tax liability will be for the business owner. No longer will there be an accountant who's got the, one of those shades that they wear on their hats, on their heads, and they're trying to figure out the tax liability on April 14th. We're trying to project forward and do it with a smart machine that's been practicing machine learning, if you will, to help us and lower the tax liability. The government doesn't want you to overpay your taxes. Believe it or not, the government wants their fair share. They don't want you to overpay. So that's the reason that we're employing at vastsolutionsgroup.com AI technology, or artificial intelligence technology. Now, on to investment allocation. You got to review your entire investment portfolio to ensure it is allocated to meet whatever your current and or future goals are. As your goals and needs change, your portfolio allocation, or the distribution between stocks, bonds, mutual funds, and all the different allocations, it's got to really you got to think about adjusting it based on the scenario. Now, the scenario, when we talk about scenario, you got to think about educational planning, 529s, Coverdale's, Uniform Gift to Minors Act, or UGMAs, transfer to Minors Act or UTMAs, whatever the case is. Much like health care costs, college savings and educational expenses, I should say, have increased well beyond average inflation levels throughout the past decade. So that's yet another thing to think about when we're talking about things for, entrepreneurs. So, we've talked about 10 essential tips for any entrepreneur when it comes to their personal finances. What I want you to do within the next 2 weeks is sit down, think about these things, and then do that on an annual basis. Within 2 weeks, do that. That will be a favor for me, but really what it will be is a favor for you. Once again, it's been a pleasure spending this time with you. Hopefully this audio has added some value in some shape or form. If you have any questions, check us out on the web, www.vastsolutionsgroup.com, or give us a call at 888-808-VAST or 8278. Once again, Kenner French signing off for Vast Voices. It's been a pleasure.